Hi everybody, we're on to training video number 4 for the Currency Selector EA, and we're going to be looking at the weekly volatility table. So on your screen you can see the weekly volatility table, the third table of the Currency Selector EA, and let's have a look at what information we can gather from this table. So as you can see, this table really shows the volatility by day of the various currencies. So that is the equivalent of the daily ATR by weekly day. Some would say, well, why is Sunday so active? And you must remember, the world is a funny place. It's got different time zones, and Hawaii and New Zealand don't have such different times, but they in fact almost a whole day apart. So when New Zealand starts trading on a Monday morning and America is still in the middle of its Sunday, and that is also why there's nothing here on the Saturday. So let's just have a look at the information that's provided by this particular table. It basically gives, as I said, the volatility per day. But what strikes me about this particular table is if you look at the volatility differences from there to there to there to there, and that's the highest volatility on the Friday, and look at the highest volatility on the Monday. Amazing differences that you see here. Same thing over here. You got 47 pips over there, and you have 25 pips on other days. So you almost see days that are twice as volatile as other days. And how does this help you? So again, if you're a day trader and you're trading certain currencies, you trade those currencies when they are in a highly volatile day. You trade breakouts and trending techniques, and when they are in a low volatility day, you trade sideways markets. The other thing you need to look at is if you're trading the Oz New Zealand and you enter a manual deal on the Tuesday, you're going to have to wait quite a long time if your target is in the region of 100 pips. But if you had entered the same deal on the Sunday, your chances of hitting your target are so much better. So that's a kind of trading strategy you can develop from knowing these figures. And you can always refine these figures by looking at longer periods in your settings. So instead of 4 weeks, you could put that as 8 weeks, and you could most probably get more refined figures. What I also find extremely helpful with this particular table is the weekend gap. So what this EA does is it takes the closing price at the end of the week and it compares it with the opening price on the beginning of the week, and it says, okay, therefore there has been a weekend gap of 40 pips on the pound yen and nothing on the pound Oz, for instance. And isn't that just amazing how, again, the volatility of the weekend gap comes out. It's also quite interesting that if you look at the sizes of the big weekend gaps actually come from low volatility currencies. A lot of those big gaps come from yen related currencies. So for those traders that are using the weekend gap, they should be trading yen related. You can immediately see yen related currency. So that's the kind of information that these tables bring that is very valuable to traders. Okay, that's about all that I'd like to say about this particular table. If you do have questions, further observations or questions, please use the forum to do that, or the comments below this particular video. Speaking of which, our next video covers the support and forum facilities that are available to owners of this EA. So please click on the top right hand side of your screen right now to get a link to video 5, which is the next video.